So we're going to take a look here at Module 2.03, the tax debate worksheet. In this worksheet, we're trying to discuss the differences between flat taxes, progressive taxes, and regressive taxes, and then have a discussion at the end, which would be best for you. Remember, we're trying to base this off of the career choice that you made from the earlier 2.02, where you were trying to determine out of two choices which would be the best career for you. In that worksheet, you've already determined what your salary and benefits would be. We're now going to try and calculate what your after-tax income would be using flat taxes, progressive taxes, and regressive taxes. The flat tax is relatively easy here. I'm going to use an income example of $100,000. If you were to have a $100,000 income and the flat tax is given to you as being 15%, you simply multiply $100,000 times 0.15 to get you $15,000 in taxes that you would need to pay to the government. As we scroll down here, the next bracket that we're going to take a look at is the progressive tax plan. In the United States, we currently have a progressive income tax, which means the higher your income, the higher percentage of your income goes towards paying that tax. The brackets that we're going to use here are from $0 up to $25,000, and in that bracket, we pay 10%. In the next bracket, from $25,000 to $34,000, your income is being taxed at a rate of 20%. As your income increases, the percentage of tax you pay goes up, up, and up. Any income that is over $80,000 will be taxed at a rate of 40%. The mistake that many people make is the following. They say if they make $100,000, they believe, oh, I make $100,000. That must mean that all of my income is taxed at 40%. That is incorrect. Only the income that is over $80,000 is taxed at 40%. The income that is less than $80,000 is being taxed at lower rates. Here, 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 and here. Let me show you. The first example we said is if our income was $100,000 and we had a flat tax of 15%, then we would simply multiply the 15% times 100,000 for a tax of $15,000. And this would be a direct tax because it's going straight to the government. With our progressive tax, if our income is $100,000, we have brackets of how much we would pay for each amount of income. For our first bracket of $0 to $25,000, that amount right there, the first $25,000 of our income, is going to be taxed at a rate of 10%. 25,000 times 10% would get us $2,500. But we make much more than $25,000, so we have to continue to pay our taxes. The taxes of $25,000 to $34,000, that bracket right there is going to be taxed at a rate of 20%. So for the $9,000 that exists between 25 to 34, being taxed at a rate of 20% brings in another $1,800 in taxes that we must pay. In the next bracket, the incomes between 34 and 44, that $10,000 is being taxed at a rate of 25%, or $2,500. But again, we make more than $44,000. So the income that exists between $44,000 and $80,000, that $36,000, that $36,000 is going to be taxed at a rate of 30%, or $10,800. Lastly, we make more than $80,000. We make $100,000. So we have already paid taxes up to the first $80,000. There is still a $20,000 amount of our income that is yet to be taxed. And that $20,000 is going to be taxed at a rate of 40%, or $8,000. Now, to find out our total tax bill, you would simply add up how much you had to pay in taxes in each of these categories for a total of $25,600. This is how much you would have to pay in taxes based on these brackets and these percentages here if your income was $100,000. The progressive tax had an average rate of 25.6% on a $100,000 income, as illustrated here. Let's compare this to what would happen if your income was $35,000. Well, if your income is $35,000, you're making more than $25,000. So the same amount of tax is going to be paid for the first $25,000, whether you make $100,000 or you make $35,000. So both of them will pay $2,500 on that first segment of money. In the next bracket, $25,000 to $34,000, is going to be the same idea. We make more than $34,000. So all of this $9,000 is going to be taxed at 20% for $1,800. Lastly, in our next bracket, we do not make $34,000, we only make $35,000. So we have already paid taxes on the first $34,000. There's only $1,000 worth of taxes we have not paid. So that $1,000 worth of taxes here, $1,000 worth of income here, is going to be taxed at a rate of 25%, or $250. If you were to add up the $250 plus the $1,800 plus the $2,500, you would get a total tax bill of $4,550 if your income was $3,500. This would be an average tax rate of 13%. Please notice that as your income went up from $3,500 to $100,000, the percent that you pay in taxes also increased. Now let's take a look at the regressive tax. The regressive tax works in a different format. For a regressive tax, the higher your income, the lower the percentage of tax you will pay. Please notice that I said a lower percentage, not a lower dollar amount, but a lower percentage. Let me explain. Here we have the same brackets of income. However, for each of these brackets, the lower incomes actually pay the higher percentage in taxes. As your income goes up, the percentage in taxes that you pay on those incomes decrease. The first $25,000 is being taxed at a rate of 40%. The next $9,000 is taxed at a rate of only 30%. Then 25%, then 20%, and any income over $80,000 is taxed at a rate of 10%. So your same $100,000 income now is going to pay a total of $24,400 in taxes. This is going to get you a rate of 24.4%. For a regressive tax, if your income is $35,000, the first $25,000 is going to be taxed at that high rate of 40%, or $10,000. The next $9,000 is again taxed at a relatively higher rate of 30%, or $2,700. That last $1,000 of income that has not been taxed will be taxed at a rate of 25%. All of this added together, you will have a total tax bill of $12,950, or a rate of 37%. Please notice that as your income is actually lower, the percentage that you pay in taxes is higher. The higher level income still pays a higher dollar amount. $24,000 is greater than $12,000. However, the percent that actually goes towards paying that tax is much lower. This is how you calculate the different forms of taxes. This module continues on and asks questions about how you determine whether these taxes are direct or indirect. Please remember that if taxes are paid directly to the federal government, it is known as a direct tax, like an income tax. But things like a sales tax that goes through a third party and then eventually go towards the government, these are indirect taxes. These differences between a flat, where there's only one bracket and everyone pays the same percentage, is different from those of the progressive income tax, where in a progressive income tax, the more income you make, the higher percentage of income you pay towards that tax. It is different from the regressive tax. In the regressive tax, the more income you make, the lower percentage you pay in that tax. Depending on how much you make, one tax plan might benefit you more than another. But please note that taxes go towards the government, and the government then uses those tax dollars to pay for public goods and services like roads, bridges, hospitals, the military, the police, firefighters, schools, clean air, clean water, Food and Drug Administration, Center for Disease Control, NASA, so on and so on. These government funds are used to help better your life. Now, that's going to be the end of 2.03. I hope this helps out.